Good afternoon, ladies and gentlemen. A very warm welcome to all of you on Business Today Television. There is an interesting conundrum in the market. You've had a 6-quarter high GDP number. Against that, the rupee is at a record low, pushing beyond 90. You have foreign institutional investors implying selling pressure in the broader market. At the same time, the Nifty just hit a record high on Monday. US Indian trade deal is absent, and making his presence felt is the Russian President, Mr. Vladimir Putin. Where are the markets headed? Which direction will they take? Will they go down? Will they go up? To discuss this and a lot more, we are now joined by market Shri Arun Kejriwal. Mr. Kejriwal has been on the Lal Street over the last 3.5 decades and has made money in all kinds of environments, whether it's volatile, whether it's bullish or bearish, or what you may see. Arunji, namaste, a very warm welcome. How are you reading sentiment at this point of time on the Lal Street? Too many positives and an equal number of negatives are buffeting stock prices.
So, Shell, good afternoon to you and all the readers. At the outset, let me tell you, you've thrown open so many thoughts that probably I could go on and maybe a couple of shows I would not finish. But let's understand reality.
You're always welcome, sir.
We seem to be talking about the trade deal. Piyush Goyal has spoken about it. It's happening. Markets say it's round the corner. But I believe that corner seems to be disappearing. We don't know where that corner is, point one. Point two, the Russian premier is in India, and I believe America wants to see what trade deals India does with Russia before it takes their trade deal with India and announces it finally. Foreigners seem to have taken a negative view, and if I were to talk holistically, one could also say that some of the pressure being brought on the market is by the FPI selling, which could be induced partially to put more pressure on India for the trade deal with the US. Last week we had a stupendous rally, 1,000+ point Sensex rally, 300+ point Nifty rally on a single day, which incidentally was a Wednesday, where we were given to understand that Russia and Ukraine have already signed a ceasefire agreement. From that Wednesday to this Thursday, we believe we have again slipped on that arrangement. I don't know. Market seems to be playing cat and mouse with you. Market seems to be tempting you with that. They say that the carrot and the stick. It keeps on telling you, I'm there, just grab it, and you don't get an opportunity. I believe the result season has not been all the best. Second, the GST cut, the impact, positive spin-off that people expected. Somewhere we seem to be a little wanting, which are some of the outliers which make you a little nervous in the marketplace.
Okay. Fair point. And see, it is in this kind of sentiment that real money is made. Our job is to help viewers, investors decide what to do at this point of time. Of course, this is a very narrow bull market, limited only to a few stocks on the Nifty. The rest of the market is in deep pain if you look at how smalls and mids have performed over the last 6 months or so. Mr. Kejriwal, at this point of time, is this time to deploy fresh money, or is this time to enjoy a good holiday on the Lal Street?
So, very pointed question and a equally pointed answer. It's too early to enjoy a holiday as of now. You have to be on your guard because you don't know when an opportunity or when something negative can come. Money, as you rightly mentioned, is always made in difficult times. I believe the time has come to start looking at some of the old PSU stocks all over again. The time where you look at dividend yield as a way of investing. Just to give you a thought, PFC is a company which typically gives you a 5% dividend yield at today's price. If you take a 52-week high low of this stock, we are barely 5-7% away from the 52-week low and a good 40-45% from the 52-week high. And like I mentioned, this stock gives you a 5% dividend yield. Not much to lose. End of the day, what is the business? It's a finance company. It finances operations, businesses which are in the power space. Decent by all parameters, price to book, which is a fair way to look at finance companies. This has a price to book which is 1/3 of what an HDFC bank would have or some of the other leading banks would have. So can you go in and jump and buy this share? Not necessary to do that. Pick and choose. Maybe on a bad day you buy, you nibble at the stock. On a really horrible day, you go and pick up some quantity and build up a portfolio from zero all over again in some of these PSU stocks.
Fair point. I think discretion coupled with valuation is an hallmark which few are able to master, but Arunji does that effortlessly. So at this moment of time, Power Finance Corporation, a Navratna company of the Government of India, is trading below book value. Book value is 385, 351 is the price. Dividend yield, as Arunji mentions, is 4.5, and of course it has all the benefits of a great tailwind in the power sector, and the company is also immensely profitable. Let me just get that number for you. The 10-year CAGR on profit is 14%. For the last 5 years, profit has compounded at 26%. When it will turn, we don't know, but these are stocks that you should be looking at in terms of dividend yield, in terms of the difference between high and low, and of course where it's trading at. So that's one gem, Power Finance Corporation, that you've found out, Arunji. Anything else that catches your fancy at this point of time where purchases may be staggered?
So I believe looking at the PSU pack, you will use the same theme: dividend yield, beaten down stock, around the lows, substantially off the highs. And if you start looking for every half an hour that you spend in the market looking at data, you'll definitely get 3-4 picks for the day. I have also started doing that since yesterday. And yesterday, the first share that I got was PFC. Incidentally, Shell, one other
as
thing.
As gently as possible, if I may point out.
Incidentally,
yes,
Shell, one other thing that I would like to point out. December, January is the time when many of these companies start announcing their interim dividend for the year, because the government wants to budget for the union budget what kind of inflows would come from their stable of companies by way of dividends.
Okay, fair point. This is something that's really an icing on top of what is actually a deep value stock. The point, Arunji, I was trying to make, and very gently so, was that we all understand that there is a difference between the highest of the high price that PFC or any such stock has hit. So that's the margin of safety in price, plus deep value, good ROCE. All this is good. Yet the problem is that the markets are refusing to let prices stabilize. Every week, every month, it's a cut, it's a death by 1,000 cuts. So what is wrong in the sentiment at this point of time?
So the sentiment is we keep on talking about India and Bharat. Here we have two markets, the large cap and the mid cap, small cap. Mid cap, small cap doesn't participate in any good news, and the large cap seems to get all the benefit. Yet another way of looking at it is that people talk of the Nifty and the Sensex for any movement that happens. People forget that three-fourths of the basket of stocks, or all the stocks other than 50 which form Nifty 50 and 30 which form Sensex, come in the, by and large, in the mid-cap, small-cap segment. So there is much more to lose in the other basket than what the numbers simply say.
So, how do we navigate this market? Are we only looking at a large cap rally where obviously retail investors have been traditionally absent? There is no let up in the SIP numbers that are coming in, and those numbers are primarily focused on mid caps and small caps. I don't see any quality large cap SIPs happening. So, the market is skewed in a manner where money is flowing into spaces where there are falling returns, and what is rising is not reflecting in the portfolio.
So you raised a very valid and interesting question. So let me try and make sense. Let me try and make a little bit of sense of what you have just asked. So we have a catch-22 situation. IPOs galore in the marketplace. Probably as many IPOs in a week as you have days. Valuations, less said the better. Yet they get subscribed, and you have that phenomena, you scratch my back, I scratch your back. Mutual funds apply for them. They fight amongst themselves for anchor allocation, and we hear things, not too nice things coming out in the press. You have another situation where history, logic, everything defies itself as far as valuations are concerned. But we haven't had a case in the last 24 months where IPOs have not got subscribed. In such a scenario, all we can do is look for pockets of comfort, look for areas where there is reasonable comfort. This is not a time to go all out to buy, add to your portfolio in a big way, but try and conserve, preserve your cash, hold on to what you have, and wait for things to settle down. Can the trade deal be a settlement reason? I believe so, because it will only happen if it suits India as well. It cannot be a one-sided agreement. We have been waiting for it for a long time, and so is the US, because besides China, which is large in supply, it does need somebody like India to also fill in with many of their basic needs. So looking at all this, we have a period which is tough, which is challenging, which will tax us. Cherry picking of stock is virtually ruled out. You have to pick and choose from what is available. You don't have much to, have those outliers which will help you through. But we are in tough times, and tough times need you to put in extra effort to get those small pockets of comfort.
You very deftly avoided answering when mid caps and small caps will rise.
Okay, so let me try and answer that. For the rally which saw a new high last week, with mid cap, small cap performing so miserably, this dichotomy cannot continue for too long. There has to be a catch up that happens, assuming markets don't continue their bull run that we are seeing in the Nifty and the Sensex, and they are waiting to just peter off also. There has to be meaningful movement in the mid cap, small cap before this rally fizzles out. At least that feel good factor rally has to come, which will allow people to distribute stock, exit positions, give you that feeling that all is well, etc., etc. A situation like this, for it to play out, would easily mean 30 days in the market. So it's not that it is the end of the world currently. We have to have this movement playing out before the market rally fizzles out, assuming this is something that would happen. On the good side, what could happen is that once there is a trade deal, once there is clarity on the way business would happen, the mid cap, small cap, along with the large cap, would start playing catch up, and you could see markets moving up, which would give you enough time to make some money, also look at exiting with profits, and then get out.
Arunji, given the way the red carpet has been laid out for President Vladimir Putin, and the news flow that is thick and fast coming in on the kind of defense deals that are in the pipeline between India and Russia, one really wonders whether the US trade deal will happen or not. It could be on the back burner forever. But the one asset class that is paying a very heavy price for it is our currency, the rupee. Now, the worst performing currency in Asia in 2025, around 90. So how do you now look at the currency at this point of time and its correlation with the equity market?
So there are some moving parts in this entire puzzle. Like I said earlier in the show, FPIs are putting pressure on the Indian rupee as well by selling and selling relentlessly. Probably this could be a concerted move where many people are involved to sort of help in bringing down the rupee. I'm not trying to talk of any conspiracy theory or anything, but we know that people are involved in such activities, not necessarily in India alone, but globally. So all of this is being done in a very calibrated manner post the movement, post the visit to India today and tomorrow, the news flow, a lot of agreements, some trade deals, some defense deals will put the US on alert that when they had spoiled the relationship, sort of gone back on certain agreements, etc., etc., it's not hunky-dory always. So it's time to redraw the friendship, the dependence, the reliability. So there will be a hard give and take. And if US-India trade deal has to get back on track, we could see that doubling up also. There are two ways of looking at it. One, it's on the back burner. Second, it could suddenly double up and action could take place immediately after Putin departs back for Russia.
Fair point. In the valuation matrix that you track, are IT stocks somewhere there? Clean balance sheets, debt-free status, dollar income versus a record low of the rupee, and of course a massive margin of safety in terms of stock price alone. Is that a segment that catches your attention? Maybe some stocks that you could discuss?
So all of it that you said is positive. The one thing that you didn't talk about, which is negative, is the fact that how much of business could possibly come now from the United States of America or from the so-called Western world. There could be slowdown. Let's understand global economics, global trade seems to be taking a little bit of a backseat ever since this Trump tariff war began early this year. And we are now, what, 11 months into the term of Donald Trump, and very little to talk about in terms of clarity on tariffs, no matter which country you talk about. So while the situation is still fluid, it also cause for worry, because it's not only one country which is getting affected, but it's the entire world which is getting affected, Shell. So while there is that pocket of comfort with the IT, valuations are attractive, Infosys has done its largest buyback ever in its history. Incidentally, buyback is not the most effective way of combating return of capital to investors, because now the income tax rules are very much against the investor, but so be it. It's a way of returning capital. So yes and no, but I would still like to hope that before the year is over, there would be finally some clarity on the trade deal.
Right. With that optimistic note, Arunji, we'll call it a day, and we look forward to speaking to you again. Thank you for joining us, sir.
Thank you. Thank you.
That, ladies and gentlemen, was Mr. Arun Kejriwal. I'll be back at 3 p.m. for the last half an hour of the markets. Stay glued to Business Way Television.